Good morning, everybody. It's Bill, and it is Wednesday, and this week it happens to be Fed Decision Day, and I'll talk about this pretty much every time it happens because it's such a big deal. And with regards to interest rates, really doesn't directly correlate, as I say every time, to mortgage rates, but it certainly prompts the question for me literally every single time I get asked a bunch. As everybody's probably seen in the news, the way it works is the Fed has a 2-day meeting, and it was yesterday and then today. At the end of today's meeting, Fed Chairman Powell will come out and tell us whether or not they meaning the Fed governors, have voted to increase interest rates today. So first, let's talk about what increased what rate. I mean, there's all sorts of rates. There's rates on credit cards. There's mortgage rates. There's 15-year fixed mortgage rates. There's 30-year mortgage rates. There's all these different rates, right? They are talking about the Fed funds rate. It is the shortest term interest rate. It's basically what banks charge each other, and it's one that that the Fed has just been ratcheting up a quarter of a point at a time for, I don't know, I think they've done it 10 or 12 times now. So that rate's gone up quite a bit. Again, this is not related to or directly related to mortgage rates. What the markets are anticipating today, despite lots of pressure from our president, is for them to increase the rate by a quarter of a point. That's what's happened at three other times this year so far, and they're anticipating, the market's fully anticipating another one. Doesn't mean that it might not happen, but most likely that rate will increase by a quarter today. But what the market's really anticipating, and this is what could affect mortgage rates, is what does Powell say about what future increases may be out there, right? So it's that at the end at 11 o'clock today, they announced the decision, and then Chairman Powell goes on and talks a little bit about what's next and what he anticipates, and just pontificates a bit about the market. That's what people are going to pay attention to. The devil's in the details in there, and just generally speaking, if he's bullish about the markets, that's generally going to be bad for interest rates. Alternatively, if he's more bearish, that's usually good for interest rates. I think people are generally expecting him to be a bit bearish, but time will tell. So anyway, I'll get a little update out once that is, that announcement happens. It'll be all over every possible news outlet as well, of course, but we'll get it out there and let everybody know. But again, don't panic. There's plenty of, just because that rate goes up does not correlate to what's going to happen with your mortgage rate. So that's it for now. Talk to you soon. See y'all next week.